Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a Bitcoin slash cryptocurrency update video for you for April the 16th. We're going to have our daily close in a little under an hour, and Bitcoin is actually pumped up over 10% since yesterday's low. So I wanted to talk about that and kind of give you my input on what I expect going forward. Before I jump into the content, though, please do me a huge favor. Hit the thumbs up button. Don't forget to subscribe to the channel. Don't forget to click that bell icon to get notifications when I release new updates. And, of course, don't forget to join the Patreon. I'm sitting currently just under $500 a month on that thing. It would help tremendously if I can get that up to about $3,000 a month to really make it worthwhile. But at least $1,000 a month would go a long way. That would be great. So if you get something out of these videos, if these videos help you out in any way, I would certainly appreciate it if you check out the description for a link to join the Patreon. It's literally under $5 a month. So, Bitcoin. I did a video on, I think it was Monday. I don't even know what today is. Today, Thursday, I think. Jeez, quarantine's even getting to me. All right, so I did a video on Monday saying that I didn't think there was any reason to be bearish yet. And of course, after Monday, price pumped. And let's pull up a daily chart here. All right, so this was, let's see, this is Thursday, so this would be Wednesday, Tuesday, Monday, right? Is that Monday? Hell, I don't know, guys. I got to pull up a calendar now. Yes, the 13th was Monday. All right, so price had pumped up. I don't know what it pumped up to, 68, 6,900, something like that. And then I did a video, I believe it was on Tuesday, saying that I was bearish again. The reason that I was bearish again was because we had put in a high, a low, a lower high, a lower low, and at the point when I did the video, we had just put in a lower high, and I said I expected more downside. So we got that. We got that yesterday. We fell down to about 6,400, 6,450, but that's where my bearishness, my short-term bear stance ended. And I shared this in my Discord group because the thing is what we had done on the 4-hour chart, we had front ran the 200 moving average. Okay, so this is the 200 moving average here. We'd front ran it. Little pissed off that we front ran it because I was actually looking along it and it didn't get there. Didn't get down to the 200. It missed it by like 0.5%. So that sucked pretty bad. But you know, that's life. You don't win them all. The other thing we had was we had this long running trend line in RSI. So here was our beginning of our trend line. Here was our first touch. And here's the third touch, which is often going to result in a bounce. So there it was. That's, you know, I saw people who played this almost perfectly. I saw other people who, when it fell to 6,400, they were expecting a waterfall or a cascading event where it started to, you know, just chop down, 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 down. I actually was in a small short position. It wasn't anything to write home about, but I was in a small short position that I did close, and I didn't close it perfectly. I didn't close it down at 6,450. I actually closed it like 6,540. And the funny thing is when this kept going down, there was a little bit of hesitation on my part, because you have to remember that, you know, when this tail was here, this was actually tucked under that line, and I started to get that like tinge of regret, like, oh man, I shouldn't have closed it, right? I actually started to think maybe it was going to waterfall down. So I started to feel a little bit, you know, bummed out that I had closed my short. But then, of course, you know, it turned around and skyrocketed. So I was like, oh, thank God I closed my short, right? But I didn't long it. There's no real excuse for why I didn't long it. I should have longed it. It was just my bear bias was screaming at me not to get caught on the wrong side of this thing because it looked really bad. The volume was absolutely terrible. This is a bullshit pump. Let me just get that out before we talk about anything else. In case you're wondering my opinion, this is an absolute bullshit pump. Okay, it's what I call a scam pump. What happened yesterday, and I'm not, again, I didn't get caught on the wrong side of this. Like I you know, nothing like that. I'm not a salty trader, right? It's great. My HODL portfolio went up. You know, all that kind of stuff is great, but I still don't like this type of shenanigans in the market because it's really bad for the market. This is what people on the outside look at this and go, what? I'm not trading that crap. That's such a joke, right? Because what happened was over here, we're grinding sideways, and all of a sudden they cascaded down. Look, you have almost no volume, right? 10, 20, 30 Bitcoins traded, right? And then poof, 741 Bitcoin traded. Scam dump, right? Wants to liquidate the longs. Get over here and boom, 1,000, right? 1,000 Bitcoin volume. Bam. All right. Joe Bob, we liquidated the longs. Let's go ahead and, time to liquidate the shorts. So then people start shorting, right? Funding was flipped really, really badly over on BitMEX. Funding, it was like 0.05%, where the shorts were paying the longs. So you had a very obvious stack of shorts. BitMEX trades against its traders. You guys should all know that by now, right? A lot of these exchanges are trading against their users, which is, I will reserve my opinion on that. But the bottom line is, if they're trading against you, they're not exactly motivated to let you win your trade. So when they see that most people are short, do you really think they're going to just sit back and let the market dump and all those shorts get paid? Probably not. So what comes next? You get this low volume pump, right? So all the traders that are using technical analysis are going, okay, there's no volume. This is a bullshit pump, right? It's grinding sideways. Look at the volume. This is a Coinbase chart. Look at the volume. This is real volume, right? This is spot volume. This isn't like made up volume. 52 Bitcoin, 121 Bitcoin, 14 Bitcoin, 23, 54, 15, 7 Bitcoin, right? We're getting down in the single digits here. 6 Bitcoin bought, 4 Bitcoin, 9 Bitcoin, right? Come on, guys. That's when you know something bad's getting ready to happen. When you get that where there's almost no volume, that's the point where the people that manipulate the market know that there's the least amount of resistance. And what do you get? You get the scam move. Sometimes it's a scam dump, like back here. Sometimes it's a scam pump, like right here. All of a sudden we go from 14, 24, 17 volume, and then boom, 523 volume. Next candle, 133. Next candle, 727. Next candle, 865. Calm down a little bit. Let people, open some shorts. And boom, 1,000 volume. Push it up, right? Punish those late bears. So then today I just sat here and consolidated on that line, right? There was a trade there, like on the 4-hour chart. Like I said, you did have the trend line. You did have the moving average. So a bounce was completely normal. It's just that they overplayed the bounce. They pushed it further and farther than what most people would have had their stop losses set. And guess what? Most of those stops, boom, now they're liquidated and they're off the books. Okay? So what comes next? Well, things are a lot trickier now than what they were. Okay? I'm going to walk through this, and I'm going to be very careful about the language that I use in this video because I don't want anybody to get overconfident one way or the other. This is absolutely not a great position to, in my opinion, open positions. I know a lot of people are opening up monster shorts right now. Other people are getting excited because, some stuff I'm getting ready to talk about. Me personally, guys, I will be patient. I'm fine scalping this. I did a video on my Discord earlier showing them the type of scalp trades I'm taking during all this mess. But I'm very, very hesitant to get into any type of swing position here, okay? I'm going to walk through these charts and show you why. I wanted to do an extra couple of videos this week. Number one, because I really need to grow that Patreon because it's really not worth doing videos every day for $500 a month. But number two, because this is a really, really dangerous time to be trading. I watched an interview yesterday from a billionaire who said this is the worst time to be day trading, right? And just trading in general. He said, really, you shouldn't be trading. You should be sitting back and just observing the market. Point blank, not everybody has that luxury. Not everybody can sit back and just observe the market for months and years, right? Some of us actually have to make a living. So, but I get his sentiment. Like, patience is going to be key here, okay? So this is the 4-hour chart. These are a couple of lines that I'm watching. Obviously, we bounced off of support. Now we're sitting right up here at resistance, and this candle is going to close in 41 minutes. So I'm really interested to see where that closes at. But I'm more interested in a couple of other things. I'm interested in this line right here, right, which was kind of a wonky support. We seem to be retesting it. That's bearish in nature. But when I go over to the daily, here's a really mixed signal, okay? First off, we broke out of this rising wedge. This rising wedge should have had a target way the hell down here, right? Look at this. If you draw this over to the break, it should have a target down around $4,000 or so. It's not looking very bearish right now, right? It just keeps pumping. We kept slamming into this 50-day moving average. That was making me nervous as a bear because the more times you test something, the more likely it is to break. Well, now it has broke, and there's only 41 minutes left in the day, and it looks right now like it may close above the 50. Well, the 50 is kind of that line in the sand that a lot of people use. If it's above a 50, it's bullish. If it's below the 50, it's bearish, right? So that is, it doesn't matter whether I believe in it. It matters what the market believes. And if other people are going to trade that as a bull signal, it could give it fuel to go higher, okay? So I find that very uncomfortable. If I wanted to go into a swing short, that would make me extremely uncomfortable right now. Extremely uncomfortable, okay? That being said, when we look down at RSI, all we're actually doing is tagging this line of resistance. We haven't actually broke through this line of resistance yet, okay? I've got the thumbs down just to denote the fact that it's a resistance. It doesn't mean that it's rejected yet. We don't know, okay? We have to wait and see what happens. So this is bearish, but this is actually bullish. And then if we stick a horizontal line on here, right, that's really a line of resistance right there at 72.93. So that's, still resistance there. Again, my opinion is it's a BS pump that's meant to do nothing more than liquidate short positions and to act as a bull trap to suck in bulls. But BS pumps can still go a lot higher than what you think they're going to go. Okay, as an example, we've talked about, I'm going to get these moving averages off of here for a second. Well, I'll leave the 200. We've talked about again and again and again on this channel how price on Bitcoin likes to obey the Fibonacci levels, specifically the golden pocket. Well, if we put a golden pocket on here, where is our golden pocket? It's between $7,976 and $8,189. What else is inside that golden pocket? Well, gee whiz. So they've actually managed to drag this out now where this old trend line and the 200 moving average are both sitting like right at the golden pocket. I find that extremely suspicious, right? So now we've got this area right here. I'm going to turn the magnet off. Right there's our golden pocket. Between there and there, here's our red trend line, right, which was so important that we haven't retested yet on the bearish retest. And here's our 200-day moving average, which is very, very normal in all markets to break a 200 moving average, come up, hit a bearish retest, and then get further downside. And it's not the first time that Bitcoin will have pulled some stunt like that. It did it right back here. Broke down below it, came up, came down, came up, tested again, and then further downside, right? That's what Bitcoin likes to do. Came up here, slammed it, further downside, okay? And then, of course, it pumped. Let's not forget that. But my point being is, I've always been a little bit nervous about the fact that we have not retested this after we broke south of it. We had a textbook head and shoulders. You normally retest the neckline of the head and shoulders. Where's the neckline of the head and shoulders? Well, would you look at that? There's the red trend line. There's the golden pocket. There's the 200-day moving average. And there is the neckline of the head and shoulders that we broke. None of those have been retested. So that's why personally I'm not interested in taking a swing short position right here. Okay? I'm just not. The risk reward is probably there if you're using the right stop losses. I just don't like it. It stinks, right? Something about this stinks to me. So, let's look at this on a line chart so it's a little cleaner. What we could say, so here's our high, here's our low, higher high, higher low, higher high, higher low, higher high. This is actually still a higher low, okay? Some people say, no, this was a low and this was a lower high, maybe. But I think right now we still have to consider this a higher low. And really, it just depends on how high this goes. If it can break this, guess what? It's a higher high. It means the bull structure is still intact. If it closes below that and then turns below this point, then we'll have a confirmed downtrend, right? We'll have a trend reversal. But on the daily, it's sketchy. It could go either way. That being said, if we move over to a 3-day, it's not sketchy. There's nothing sketchy about it. It's straight up an uptrend, okay? Look at this. There's no downtrend there, period. You can't make that into a downtrend. You've got a high, a higher low, a higher high, a higher low. When you look at RSI, it broke above support, resistance, found support, bounced, hit resistance on the yellow line, came back down, found support on the blue line. It was actually touching it and bounced off of it. and now we're up here retesting the yellow line again. Okay, so if it breaks through that yellow line, guys, I think it's going higher. I really think if it breaks through the yellow line, I think we're going to see 8,000, right? I really think we'll see 8,000 if we break through and close above that yellow line. Maybe even 8,500. Okay, so this purple line here, okay, we have this line 6,900. It's above it. So now this next purple line is actually the monthly resistance, right? If you put it on a monthly chart, it's like the neckline here. So we're retesting that again. Again, we're sneaking above this yellow line of resistance in the weekly. This thing is just really, really punishing people, right? If you're in a positional short, right, where you're actually paying funding, you are probably getting very squeamish right now. Or if you're in a short position where you're like in a swing short, you're probably very squeamish right now because this has been pumping for 5 freaking weeks, right? It will not stop pumping. It just won't. All right, sorry about that, guys. There's going to be some type of break or some type of weird split in the video here. My wife was actually mowing the lawn, and she got behind my office window, and it got so loud that I didn't realize it was actually really, really loud in the video. So I'm redoing this section. So I think I left off talking about how the market just refuses to go back down. And if you're in a short position, that you're probably getting pretty squeamish right now. I want to say this, right? Even though this thing is being pumped up like this, and I don't know if I talked about this yet or not, but essentially I really firmly believe that it's only being, pumped up or artificially inflated, whatever you want to call it, because of the stock market. Okay? Again, just in case I already talked about it, I don't want to go too in depth, but the bottom line is this. I personally believe that the stock market is being artificially inflated by all these stimulus packages and things that are going on. It's not really doing much for the economy, but it is pumping up the stock market or propping it up. It's not pumping, it's propping it up is what it's doing. And I do feel like eventually that house of cards is going to fail. So if we take a look over at my other chart here on my other screen, I've got a chart of the Dow Jones 30. Look, it pumped today. Let me take a quick look at it. It pumped about 5.5%, just under 5.5%, in about 7 hours. And then, oh, look, Bitcoin also pumped, right? So I really do just think it's a case of, as long as the stock market is being artificially propped up, I think Bitcoin is kind of, getting some benefit from that, if you will. I don't think it's a benefit. I think it's bad long term. But, I'm not going to complain because, my HODL portfolio went up over the last 5 weeks, which was kind of nice because, even though I'm not holding a lot of cryptocurrency, I trade more than 80% of my portfolio. It was still painful to watch it lose so much so fast on this drop. So it is kind of nice to watch it go back up, and I may even start taking some profits if I see a good reason to do so, even though I don't really trade that portion of my portfolio. But, bottom line is this. I mean, we still, on a weekly chart, we are still in bear structure territory, right? This is still a lower low, and so far this is still a lower high, okay? We haven't changed trend. This has been a downtrend really since June. There was some questionable period right through here where it threw a lot of people off because it put in the higher high, right? Myself included. If you guys remember, if you're watching the channel, that's the point where I said, maybe I am wrong. Maybe this was the bottom back here. I don't think so, but maybe, right? And then, of course, it ended up being a big bull trap, which is kind of what I had done some videos saying, look, I think this probably is a bull trap, but I don't know. And I don't have any confidence, enough confidence to, short it at that level. And I didn't short it at 10.5. I actually did take some profits, on the following week around 10.3, but, I didn't catch this whole move down or anything. I'm not like, going to sit here and pretend I did. I wish I did. I didn't. I think I ended up getting short. I don't even know now. Maybe it was 9,200. I ended up shorting on this bounce here or something. But I definitely didn't short the top, right? And I didn't buy the bottom. Point blank I did. And I think I bought some Bitcoin around 45 or 4,600. And I sold it up around like 6,200. Like I started selling off 6,200, 6,400, etc. And then I've just been, doing my day trading stuff and taking a couple of swing trades. There have been some good swing trade opportunities through here. I just think right now it's really sketchy. But I know a lot of you who watch the channel, you're not traders, meaning that you don't trade every day. You don't even swing trade. You're looking more like, when should I put my money into Bitcoin? And number one, I can't tell you that, right? I can't tell you that. Even if I wanted to, it's not legal for me to tell you that. I'm not a licensed financial advisor. But, what I can say is me personally, the way that I'm handling it, and I'm not telling you to do the same, is I'm just being extremely patient because I do think that the U.S. stock market is going to collapse, right? I still am absolutely 99.9% convinced that that thing is going to collapse and that what's happening right now in the stock market is nothing more than a dead cat bounce. And in fact, it's nothing more than complacency before a really, really bad recession, okay? I do think that it's entirely likely that the S&P 500 is going to probably go back down to, probably have a full 50% retracement. So let me just show you what I'm talking about real quick. And I know a lot of you guys are like, I don't do stocks. You should, right? I can't give you advice on how to trade them, but I can tell you flat out, you should be looking at stocks, right? There is just as much, if not more, opportunity in stocks as there is cryptocurrency. And the same stuff works. I mean, this right here is an eBay chart. This randomly happened to be the chart that I last looked at, right? Look at these trend lines, right? They work just like crypto, guys. Just like crypto, right? Everything works the same way. So if you're good at trading crypto and you stay, disciplined, there's a good chance you're going to do well in stocks. But if you look at this, I seriously, this looks like a dead cat bounce to me. If we look at it on a monthly chart, this is really support back here, down around 15 to 1600. And if this thing drops all the way down to that level, and I've talked about this in other videos, it drops down that level, you're talking about a 40 to 43% drop from where it's at right now, right? And you're talking about a roughly 53% drop from the top. That's historically what that market does. 57% here, 50% here, right? And you go back in time, there was a 35% here, 28% here, 48% here, but they do get those big drops. And if this thing does drop down there, right, to that level, one of two things is going to happen with Bitcoin, in my opinion. I see it as a very binary type of deal. Either Bitcoin is going to become a store of value where people rush to it to try to avoid inflation, okay? In which case, Bitcoin would do what a lot of people think it should do, and it would skyrocket because it would actually be digital gold. Or Bitcoin is going to go down because it's coupled with the stock market and always has been coupled with the stock market. And if it goes down, I think that's the scenario where we see that $3,700 or $3,800 was not the bottom, right? And I don't think it's going to become digital gold. I'm hedged, so if it does, I get, paid off of it. Like I've told you guys time and time again, I always keep at least a couple of Bitcoin, right? Just in case, right? I think right now I'm actually, I did sell off some of my Bitcoin, so I think I'm actually sitting like 1.75 or something, which is the least amount of Bitcoin, least amount of crypto I've had since early 2017. But I have very little faith that Bitcoin is going to come out of this thing unscathed. So every time you listen to one of my videos, remember in the back of your head that I am very, very bear biased, right? Very, very bear biased on the macro picture. I wasn't. Like, you guys have been watching me for a while. You know that a lot of people have accused me of being a bear the whole last 9 or 10 months. They're like, oh, this guy's just a perma bear. I wasn't. I was actually a perma bull. I actually did think that Bitcoin was going to go to new highs. I did think that Bitcoin was going to go up and break $20,000. I just thought that it needed to go back to 4,000 first. And then I thought it would go higher, right? But with everything going on in the world, that's changing. And I'm not near as bullish on Bitcoin as I was the last 3 years. I'm actually very bearish. I actually think that it has failed in its mission to become a store of value. It doesn't mean it will always fail. It doesn't mean it will never happen. But I think right now it's showing that it's not a store of value. Gold is skyrocketing. Bitcoin is not, right? Gold is trying to take out its old all-time high. Bitcoin is down more than 50% from its all-time high, right? And Bitcoin is just moving with the stock market. That's all it's been doing. this last month or so since the big crash. So I have very little faith in Bitcoin. I do think Bitcoin is going to follow the stock market, and because I have very little faith in the stock market, that's why I have very little faith in Bitcoin. Okay, it doesn't mean Bitcoin won't ever get there. It just means that maybe it wasn't ready for it yet. The technology, isn't quite there yet. All that kind of stuff. There's a million different reasons that it might not work. Okay. Anyway, that's my opinion, guys. That's what I think is going on. Obviously, I'm going to stick to trading trends. I'm going to stick to trading the smaller time frames because I am very nervous about those larger time frames for the reasons that I laid out. I still think that the 3-day has an uptrend intact. I still think that a daily chart could go either way. It is sitting up here around resistance on that, so maybe it does go down. I guess realistically, this looks like the hourly is starting to turn down. Realistically, if I had my way, what would happen is this would pump up to $8,000, let me get into a really good short position and then dump. But it almost never makes it that easy. It almost never gives you the perfect entry point like that, right? It gave a perfect entry point on 7,200 a few days ago, but that's rare. It almost never makes it that easy, and that's the reason that I don't know if it'll actually get there, because it would be a really, really obvious short play for a lot of people like myself. So I probably will miss the swing. I probably will miss the pivot if this is it, and that's okay. I'll keep scalping the smaller moves and protect my capital because, like I've said in previous videos, because I think this is going so much lower, I want to make sure that I have as much capital as possible to invest in it. And not just Bitcoin, but the stock market too. It's like I was talking to a friend of mine today who's never traded crypto in his life. He only does stocks, and he's only been doing stocks for like 6 months. If you wait and you're patient and you catch the actual bottom of a bear market, whether it's in crypto, whether it's in stocks, you can become extremely wealthy, right? Just off of a couple of trades. For example, if you had bought Amazon when it was at or near its bottom, you could have been buying Amazon around $6 or $7 after the .com crash. And if you had done nothing else but bought Amazon, you would be up over 400x right now, right? So if you put in $2,500, it would now be worth over $1 million less than 20 years later, right? I think back to what I was doing in 2001, 2002, and I was a young guy. I was an adult, but I was young, and I was out there pissing all kinds of money away. I was really into cars. I had like 25 cars by the time I was 25, ranging from lowrider trucks with hydraulics to I had a 72 Chevelle. I had a Honda Civic that was like all tricked out and stuff. I had a stereo system in one of my cars where we cut the back seat out of it and put a wall of speakers in it that cost $7,000. I think about that and it's like, oh my God, if I had just put some of that money into the bottom, right? Gold at that time was around $200 or $250 an ounce. And now, of course, it's up to, $1,700. So it's up more than 6x. Catching the bottoms is life-changing. And you don't have to catch the perfect bottom, right? Let me give you guys a quick example of Amazon, because most of you will probably know this, but some of you have probably never actually looked at an Amazon chart, okay? And I want to show you how easy this actually was to catch the bottom here. So obviously Amazon's sitting up over $2,400 right now. This is the .com bubble back here. Okay, and it came down and crashed. This is a monthly chart, okay? I wish all this stuff wasn't in the way, but that's fine. Look at what you had down here. You had a left shoulder, a head, a right shoulder. You had an inverse head and shoulders. So if you'd have bought on the break of that inverse head and shoulders, you'd have been buying around $18, okay? That's on a monthly chart. And if you look at volume did support it. Maybe not. It's up for debate, right? That head and shoulders is up for debate because volume higher on the left shoulder over here, sort of fairly low in the middle, but it's pretty high volume right here on the head. I don't know. Anyway, if you zoom into a weekly chart, right? Let's get volume off there. Go back to 2001-ish. Look at this. You had a W. You had a double bottom. See this? Down, up, down, up. Came down. Didn't quite retest the neckline, but it did retest the wicks. And that was it. Off it went, right? That was the bottom. And if you look at RSI around that time, let's pull all these lines off of here. So here's your double bottom, right? And I would be willing to bet here's your trend line on RSI. That's it. First touch, second touch, third touch. And if you bought right there, you would have been buying Amazon at $5.97. Meaning that if you were still holding it, you would currently be up. I don't know if they've had any splits or anything since then, but just going off of the basic numbers here, not counting anything else, any other factors, it's up around 40,212%, right? And you can do that on so many stocks, guys. If you look at Netflix, Netflix was one of the stocks that I looked at buying in 2007, but I didn't have $25,000 a day trade with, so I just didn't think that, I didn't really think stocks was for lack of a better term, I didn't think it was for poor people like me, right? At the time, I wasn't really poor, but I was definitely lower middle class. I made about $30,000 a year in 2007. I was working at a job. I didn't have health insurance. I didn't have benefits or nothing. And in fact, I ended up going bankrupt that year. I got sued by the hospital. But if you look at this, if you look at Netflix, right? Watch this. So here was your old high over here. So here's your, your ran up hard in 2004, came down, put in a double bottom, down, up, right? Put in that double bottom right on top of the old high. So on top of a level of support. And it actually had made a little bit of a lower low there and made a higher low here. Of course, we all know that's called bullish divergence. So now you have a double bottom on top of support with a bullish divergence. How hard would that be to take that trade? Where would you take the trade? Lots of opinions on that, right? Some people would wait for the break of the neckline. Some people would take it right on support. I'm a more aggressive trader when it comes to divergences. I tend to take them right on support if I see a divergence forming. So I'm the kind of guy that I trade like that. I probably would have been in probably on this first red candle right here. So I might have had like a 5.5% drawdown maybe. But again, that would have allowed me to get into Netflix at $1.35 a share. To put that in perspective, Netflix is currently $439 a share. So again, a 300 or 400x return, right? So say you put in $500 and you get a 400x return. What is that? It's $200,000, right? Am I saying you're going to get that? Of course not. What I'm saying is that's the reason I'm preserving capital. That's the reason I'm not trying to chop myself up and lose my trade fund or lose some huge portion of my trade fund, because if I'm right and if this goes down as low as I think it's going to go, I could get a generational buy opportunity where I buy something and 20 years from now it's worth 100x or it's worth 500x, etc., etc., right? And you don't have to put in a lot of money when you're getting 100x returns to be really, really game changing. Say I put in 10 grand just as a nice, easy math number. Say that when the stock market finally bottoms, if I'm right, I put in 10 grand and I 100x it. Well, what is that? It's $1 million, right? 20 years from now, I will still be plenty young to enjoy, that money. So, and again, guys, it's basic technical analysis. Look at this, right? Here was the high in 2011 when it came crashing down right here. Where did it find support? Right on top of that old high, right? Then you start looking at all these highs. Well, this has never been retested. It has kept going up, right? This one's never been retested. It's kept going up. So, and I'm just using Netflix as an example. If it's up at $439 and it crashes and I get a chance to buy it down at 200 or 132 or even way down here at 43, right? Probably not going to get a 100x off of those, right? Let's be honest. It's unlikely I'm going to get 100x off of them. But still, we're talking like really, really good returns. I watched an interview with a billionaire, I think it was yesterday, and he was talking about getting 50x returns, right? And it was reassuring to me that somebody that was worth so much money and who had done so well with investing had some of the same thought processes that I had. Not that he got them from me, obviously. These are thought processes that he developed on his own over long periods of time and success. But it made me feel like I was on the right track to be like, oh, wow, okay. my thought processes are sort of like that guy's over there. So that's how I look at this, guys. I'm not looking to get rich today or get rich tomorrow. I'm looking to set myself up for life over the next couple of years, right? So anyway, that's my thoughts on it. Like I said, I apologize if this video is a little bit jumpy because I don't know exactly where it got cut off because of the lawn mowing and stuff. But I did my best to kind of tie the ideas together, so I hope you appreciate that. Also, please remember that, guys, while I do trade full-time for a living, I am just some guy sitting in a spare bedroom. So nothing in the video is financial advice. Nothing in the video is trade advice. Obviously, you should always do your own due diligence and seek out professional investment advice before making any type of investment in stocks or cryptocurrency, right? I could absolutely be wrong. This bear market could have been a blip, and we could be going much, much higher. So always keep that in mind, right? Nobody's right 100% of the time, especially not me. I don't have a crystal ball. These are just my opinions. These are my thought processes, and this is how I'm going to approach the market. Okay. Also, if you haven't already, check the description. Grab that link. Join Patron. It's just $4.95 a month. You'll get more frequent updates and more frequent chart posts and all that kind of good stuff. This is James with Crypto Common Sense, reminding you to please trade safe.